Hi everybody, this is Meherban Faroogh from 1005th Club, and today is February 22nd. Let's thank you all for coming to class, and more importantly, I'd like to thank 4718 for submitting us. I think it's the second or the third trade plan. I don't recall. I think it's the second one. I'm really impressed by the quality of your trade plan and also the amount of effort you took in to be so creative. You seem to be somebody who's very creative in graphics and whatnot. So really enjoy that. So he's looking at. I'm sorry, I still don't know your names. I'm not sure. So, but you're looking at USD yen. Looking at USD yen and planning to go long. Okay, now I just picked up this plan. I had a chance to even study, which is fine, because that just gives you a good idea. Let me just close some of these extra charts down. And what I'll do is so I've opened up a blank USD yen chart, and I know my chart is flickering a little bit, but and I also have my own USD yen chart with all the markings and whatnot. But we'll start with a blank chart and see where I'll call you a he, where 4718 is trying to plan trade. Okay, the flickering is back. Entry price is 80.05. So let me first put a line there. 80.05. 80.05, and I'll call it out as green. I'll put it a little thick bold so you can all see that very clearly. Okay. Maybe that price is not very clear. So I'll change this to a soft green so you can see the price. Okay, 80.05 and stop loss is 79.45. So stop loss is 79.45. 79.45 is the stop loss price. And I'll do the green again. And I'll do a little dashed line so that comes across as a nice stop loss. Okay, so this is a daily chart once again on USD yen. And the target he's looking at is 81.17. Okay, so let's look at target here. I'll put it at 81.17. 81.17. And for that, maybe what I'll do is I'll choose a different line, like an orange line. So it stands out. Okay. So entry here, looking to take profit there, with a stop loss at 79.45. Let's look at the basis of the trade. Now, what I really like about 4719 is he puts in the details of the trade account. So there's a little no chart. Okay, I hope you can record it now. Incorrect target. Sorry, 4718 is my target. Thank you. Good catch. 81.71. Okay, it's 81.71. Good catch. I apologize. 81.71 is what he's looking at. So what I like about his plan is he puts in quite a bit of detail, and it seems like he also takes these trades, by the way. Value of the account is 5,200, 3% risk equals to $156. The value of USD yen PIP is 130, 156 divided by 1.3, I believe would come out to some number. And then he's taking into account a difference in his entry and his stop loss, and it comes out to almost 2 mini lots. That's the basis of him going to mini lots, and this is very important because especially if you're new and you don't know much about trade management and leverage and whatnot, you might just put in, you have like a $5,000 account, you might put in 10 mini lots or 1 standard lot or 2 standard lot, and you might kill yourself in just a few quick trades if it goes against you. Okay, so this trade management piece is very important. Okay, the objective is to enter the trade with quantifiable downside risk that can change Have a risk-free trade as soon as possible. Perfect. Allow the trade to run into structured stop loss. Makes sense. Okay, now here I see in table 2, end of day price. Okay, I think you're talking about boost stop loss to 79.45, 81.41. Okay, we'll come back on this later. And again, you put some amazing amount of details. It's a little different than the suggested trade plan that we have on the site, which is a little simpler. But you know, if you like this format, 87.14, I'd encourage you to do that. Don't change it because of what I suggested earlier. Okay, method is analysis was doing using fx3.com think of sim. Okay, that's good. Okay, let's see. Let me just move this a little on the side and let me read his plan first properly. Entries on a 1 hour time frame. Okay, identify strongest, weakest currency. That's a good approach. Identifying strongest to weakest currency, and we teach that also in 1000 Tip Club. I haven't covered that before, but so looking at USD as the strongest and yen is the 4th strongest, right? So if this is the sequence, when you did the plan, if USD was the strongest and CHF was the weakest, if that was the case, then going long on USD would make perfect sense, right? Stuff like that, or going long on Euro would make perfect sense if that was the sequence. Okay, strongest pair, weakest. Okay, got that. I think this is standard stuff. You're just putting, okay, you're putting a methodology here, which is good. Chart. Okay, got that. Results. Strongest is USD, weakest is yen. That's what you found out. Okay, trade long USD yen. Perfect. I like that approach. 47.80. Key closing prices. Okay, blah, blah, blah. Okay, now on table 3, he points out key price. Okay, key price, month, week, day. Alright, so this is, I'm guessing this is month, week, and day. Oh, this is beautiful. We've taken a lot of time and effort to figure out. I'm sorry you didn't pay attention to this 47.18 previously in your trade plan, but this is also the format. I like this format. And again, guys, you can follow this or the one that we already have on the site. But I understand what he's doing is he's figuring out that across month, week, and day, 83.13 is a key price level. And let's try and do that in real time. 83.11. So let's see. Let's put a price line right there. 83. That's above his current 83.11. Come on. 83.11. Okay. And I'll keep that gray, but I'll do a little thicker line. So as an example, if I went on my, let's say, monthly chart. Now, the way people, especially who are new in class and attending class and observing these trade plans, submissions, and analysis, when I draw these lines out and I'm teaching along with what plan I have in front of me, this should be a good learning experience for you. And that's why I'm taking that effort to say, okay, so 83.11, how did we come up with that price? And it's different ways of teaching you support resistance, Fibonacci, whatnot, from the trade plans itself. So if I had to, and I know my screen is flickering a lot, but so 83.13, 83.11. If I start looking on this, let me go to my trade plan here. Now 83.11. Okay, maybe I'll come back to that later, but I don't see it on my chart at my end. I see 83.28. Maybe I missed something. 83.15 is a good Fibonacci. 83.15 I see is a good Fibonacci. 76.4%. So that's about it. Okay, on the daily chart, he's got 80.96, 80.62. It's a whole bunch of numbers. And this is wonderful. He's also pointing out number of times crossed up or down. So he's actually tracking it all. Very detailed. Very detailed. And see, the thing again here is, I'll tell you from experience, when you are so detailed, and 47.18, correct me if I'm wrong, but when you take the time to analyze the pair in that amount of detail, it resonates with you far more strongly. You get a far more better feel of what the heck the pair is doing versus just opening up a chart and trying to figure out the trend and, oh, where should I go long or short. This amount of detail, you build confidence. You said it, 4718. You build confidence in your trade plan. Okay? Now, this might seem a lot of effort to you, and I'm guaranteeing you this is a lot of effort. Just this chart that he built, again, I don't know you very well here, 4718, but just this chart that you built, especially if you're somebody new, this would take you at least 4 hours. 4 hours or more. That's the amount of effort that's put into this, okay, for the first time. Now, next time it's easy because you already have these numbers. I mean, your numbers on the monthly and weeklies won't change as much. And again, stuff he's already done on dailies. How many times has gone up, above, below, won't change except, a couple of times he might just change it. But the amount of effort put into creating this makes this person resonate with the pair a lot and gives a lot more confidence whether to go short or long or which direction. And when this person does the same thing across, let's say it's parallel and inverse pair, you start getting a much better feel. So if this was a Euro-Yen pair, for instance, he did something like this on Euro-Yen and then went and did the same exercise on Euro-USD and USD-Yen, you are almost solid. Okay? But that's the amount of effort that you need to spend to understand which way your pair should be headed, what's going on from a technical perspective, and then layer on top of that the fundamental side of things. Okay, let's keep moving on. So on this one, okay, so see what he's doing here. He's identifying monthly, weekly, dailies across all these levels, the number of times it hits, number of times it went above resistance, above support, whatnot, and then on the chart, he's pointing out there's this level, 80.05 and 79.45. Those are the two levels he's pointing out. Now, if I go by the trend, okay, so again, this is where multiple time frame comes into play, guys. This is where multiple time frame analysis comes into play, and I'm still not sure if you can see my charts properly. But one thing I'm beginning to learn is if I hold down with my mouse on the chart, it doesn't flicker as much. But if you look at the monthly chart, look at this. It's on a short trend. It's short. It's going short. But if you look at a weekly chart, likewise, and you scroll it up a little bit, you'll notice that it's short, right? Now, the one thing that would strike you instantly is it's made a little move here to the upside for the last 3 weeks, and it's kind of hitting this level right there, 80.23. Okay, and I'm not sure if you have 80.23 on your level somewhere here. Let me make sure I pick the right number. So this low here is 80.23, 47, 18. 80.23, that low right there, October 30th. And it seems like it tried to breach it once, right there, 82.13, look at the high. It couldn't breach above, right, that candle. This candle couldn't come back up this far, but recently, it's been able to go till 80.32. It's sitting right at that number, 80.22. And my take on this, from a technical point of view, would be that overall the trend is short. It has retraced. It's kind of trading in this range, if you can see that very clearly. If I expand this up, this is a weekly chart, and you know what I'll do? I'll just put a line here. I'll almost put a line here in blue. Guys, are you able to see my chart properly? Okay. I hope, because I'm wasting time here. Blue, and I'll put this. So you can see it's trading in a range, 70.55. My numbers are a little off, but that's fine. But I'm just trying to show you visually. So the yen is trading in a range. Can you see that, guys? Can I have a quick guess? On a weekly, and if you go down to the daily, you of course see the same thing. If I scroll my charts quite a bit, see that? It's trading in a range. That's the range. It's trading from 75.55 to 80.23, right? And as you should know, that yen has a tendency of being bought or sold depending on, again, what statements come out from Bank of Japan and whatnot, right? So if you ask me at this point, it seems to be converging or hitting previous previous support that is now turned resistance. It's also hitting, or there's a double top right there, 80.23. Can it further continue to go long? Sure, it can, right? But what you have to keep in mind is that it's I won't say little, but it's a little bit more than overstretched. Now, if you're already in 80.05, I would suggest you try and make it safe as quickly as possible. Why? Because there's a risk, I see. And the risk is the very point I'm talking for the last 5 minutes. It's trading in a range. Overall, if you look at monthly, weekly, daily, it's a short move. On the daily, for the last few days, I guess it's February, beginning of February 1st, really. For the last few days, it's been an uptrend. So that's great. There's a trend. There's a long trend. Now, I'm sure if you went down on an hourly chart, you'd see a very strong trend. See, if you look at the hourly chart, and here, see, this is where the multiple time frame analysis comes into play. And 4718, I'm sure you know this, but this is more for people who are still beginners and trying to understand how to read this. If you looked at the hourly chart, oh my God, what a beautiful trend. And I completely agree with that. It's a long trend. Looking at that, you should try and get in long as best as you can. But if you go back and look at the big picture, you realize that this, what you saw on the hourly chart, right, actually is part of the larger trend. Okay? And the larger trend, as I scroll my charts, actually started from 124 in the recent time frame, 124.14, right? Boom, boom, boom. What I was talking about earlier is, if you look at the monthly chart, sorry, I'm just repeating what I said earlier. But if you look at the monthly chart, guys, look at that. It's been dropping from 124.13 all the way down. Okay, and it started flickering again. Maybe I should condense my chat room. I won't be able to see the chat for a second, okay? Okay. So that's a monthly. The recent long move on a monthly chart, whether you see it on a monthly chart or a weekly or daily, in my opinion, that's a retracement in the overall trend. One thing that should stand out very clearly is, if you look at the monthly, it's hitting prior support, right? 80.40 is showing here, though it's 80.25. If I go down here on the daily, right there, that's low there, 80.23, that's what it's hitting. So if you're already in the trade, I would suggest you make it safe as quickly as possible. And the way you make it safe, guys, is if you manage to enter at 80.05, and that's what I would do, 47.18. That's what I would do. So it's your choice. See, it went till 80.35. If you're able to get an 80.05 and it's still there. I know it's 15 pips, and again, this is not about scalping, it's about making it safe. Whatever you have, so it's 2 lots, just remove your 1 lot, book 15 pips, and use those 15 pips to lock it below. So put your stop loss, move your stop loss up, and put it at 80.00 or put it at 79, at 79.95 or something like this, just to make it safe. If you still believe in the trend, to go long, then it should go long. And if you don't, you're safe. Because we still keep it at 79.45, I think it might come and take you out. Okay, so you've got to be careful there. That's my quick 2 cents on this now. I'll go on. I'll review your plan the rest of the way. So the rest of the plan talks about. Let me just see if I can just look at it. Just one. Maybe it's because I'm opening up too many platforms, because I have the chart and the trade plan up at the same time. I don't know if that's the reason, but I'll just look at the trade plan. But even that is flickering. The fib high, okay, good. You're looking at a lot of detail, that's good. Entry. Explanation, the key price levels in table 3s generally do not carry as much credence due to short historical data, which essentially covers only 16 months. Data beyond 20 years back is not really available. Point taken. The trailing stop initially at 79.45 is based more on this value. Okay. The optimum entry was originally identified to be a retest of the 38.2% fib at 79.39, entry at 79. This level as a scale the entry as a uh, 4718, I'll just let you know that you are very thorough, okay, and you got all the, in my opinion at least, you got the right ingredients uh, to be a successful forex trader. So I hope this works out for you. You're looking at the right level of details here. Now, and I also understand that you have a good sense of fibs and whatnot. So just because my screen is not collaborating with me, I don't want to keep going back from your trade plan to my price chart and confirm. But as long as you pick up the right lows and the right highs, or vice versa, highs to lows, on the daily chart or the monthly chart or the weekly chart, you should be fine, right? And whatever levels come up when they coincide at 38.2 or whatnot, so those strong levels to look at. And as long as you understand the overall technical trend, long or short, and again in context of the fundamentals, what's happening, what's going on. Okay, the target is originally set at 81.17 with a trading stop. Okay, so you get to that. Ultimately, current price can be analyzed as short term average street trade. And that's the whole idea, guys, to average street trade as quickly as possible. Yen, weak yen, previous in 2011, Japan posted its first annual trade deficit in 3 decades of more than 30%. With slowdown in world economy, Japan exports will continue to suffer. That's a good point. Yen is in a multi-decade high versus yen is at multi-decade high versus US dollar. Government is being urged to intervene. Yeah. So when you look at the USD yen on a monthly chart, as I explained, going short from 124.14 all the way down to, I think it's 75.55 something. So when USD yen is going short, your yen essentially is in a multi-decade high. Yen is very strong. And when your yen becomes very strong, or any currency for that matter becomes very strong, the export for that country suffers, right? So that's essentially what 4718 is pointing about. And he's pointing that this is what favors the weak yen. So essentially it's the Bank of Japan intervening. I understand that's where he's coming from. Okay, strong dollar figures. So keep your heads up while all these further debt challenges that face the US nation, 15.4 trillion, it remains the world currency. And as demonstrated, still be a flight to safety. Absolutely correct. Now, this is a point that people tend to miss. And again, initially when I was trying to learn Forex, I got swayed by the comments out there about the weak dollar, and I still would at times talk about. So the sovereign debt crisis that I keep harping about, and that you see a lot of people talking about on the forums, that's currently in the EU. If and when the bubble bursts, I have a feeling it will ultimately come to the US. That being said, in the near to midterm, US dollar is the world's safest haven currency. So whenever stuff happens, bad stuff happens, people, flight to safety, US dollar. Right. So, okay, so based on that, your exit trade plan summary is long USD yen with this pair at post, blah, blah, blah. This may be a long-term opportunity for great rewards. Japan's issues ranging from decline, aging population, suffering exports are documented. With a high savings rate, consumer savings is likely. Yeah. So 4718, unfortunately, my view here is that I think the USD yen would continue to go short, even though dollar is the safe haven, right? So at this point, I think let me go to my charts and just make sure I'm not missed anything else. So once again, you're taking all that great information you've gathered and you put it into charts. Wonderful. I mean, there's so much detail in here, guys. I would strongly recommend, especially if you're new to like a beginner or whatnot, go on forexstreet.net under trade plans, under 1000 Club trade plan, and pick up 4718's trade plans. Print it, and then follow along with your charts. If you're new, I can appreciate it's a little confusing if you're new, but that's the whole idea. You're trying to learn. Okay, so this is a great example. A lot of good details. My view at this point is, would I feel comfortable going long at 80.05? Unfortunately, I don't feel comfortable doing that. That's just me. And my reason for not feeling comfortable to go long at this point in time on 70s. I really wish I knew your name. It's far easier. um, is when you look at the daily chart from February 1st, it's been in a very, very strong uptrend. And when you have a very strong uptrend like that for the last few days, retracement is bound to happen. This is bound to happen. Number one. Number two, you can see very clearly that on a daily chart or a weekly chart that since what's my date here? Since is that August 4th? Yeah. Since August 4th, 2011, it's been range trading and not been able to break above this range. Now, can it break out? Sure, it can. I mean, anything can happen, right? So between 80 80.23 down to 75.55, it's been range trading. Number one. Number two, the reason it's been range trading has a little bit also to do with this support here, 80.23. So 80.23 is almost the line in the sand at this point in time for this pair to break, and it did break it, by the way. It did break it today when it went above 80.35. But on account of the strong trend, it has to retrace. The other thing you want to be careful about is it's already gone up that high, right? So if you look at the hourly chart, and you start from when the Dow closed yesterday, so that would be 16, 17. Excuse me. Roughly 17, right? And the best way to draw this line, by the way, is you go on the daily chart, just so you know. You go on the daily chart and you put a vertical line on the day, and then you come back on the hour, and it'll show you precisely right there. You don't need to spend that much time. So you can see since it has gone from, let me just make sure, from somewhere around 79.66 up to 80, right? Now it's really trying to break above that level. So there seems to be a lot of momentum. It's done about 69 pips, and if I look at my ATR, what's my ATR for this one? My ATR for USD Yen. So my ATR for USD Yen actually is 51.50. I don't know if you can see my Thinkorswim chart. On the side I have these ATRs. So 51.57. About 51 or 52 pips is my daily ATR. Okay. Today it's done about 66 pips. It's gone above 14. So it's actually overstretched its ATR. I would not take this long. I'd be a little hesitant. In fact, I'd be looking to take it short, quite frankly, at this point in time, trying to make it safe. I have to say this again, any price points you get out in class, whether it's from the students or from myself or Dinesh, please do not trade it in a live account. If you do it at your own risk. Feel free to trade it in a demo account. Okay? That's all I have to say, guys. I hope that helped 4718. And others who are in class. I'm sorry, the connection, for some reason I just can't figure it out. Whatever you can save, Wiki mod, Legenda, and archive, that'd be great. So do we have any questions? That's all I have to say today. Well, you're most welcome. I really hope this helps. It was absolutely a fantastic plan, yeah. And what I'd like you to do, 4718 and others also, use this as an opportunity to learn during the week. So we don't have to just come on Wednesdays at 7 in the morning and, submit the trade plans, whatnot. When folks like 4718, Mark Knight, whatnot, submit their plans, they or you can comment on it during the week, right? What happened to the pair? Follow it, stalk it. You have to stock your trade plan, see what happens, whether it goes in your favor or against. And one thing I want to be very clear, I said this before as well. I hope you guys can hear me, so I'll take a 5 minutes. It's not about being right or wrong. It's really not about being right or wrong. And here's why. I have no clue what is going to happen in the next 24 hours. I don't. Now, if you do, then let me know. I can guess a couple of things, right? But I don't know. If you asked me over the weekend, last weekend, I would have probably told you that Greece may not get the bailout. A lot of people were against Greece getting the bailout. They went in this weekend with the vote and whatnot, and it worked out for them. They got the bailout. Now, if you still ask me, I would probably still tell you that they, almost with certainty, I would tell you, and I shouldn't be that strong, but they won't meet the 120% GDP, debt to GDP ratio by 2020. And the reason they won't, in fact, they won't be able to meet even their austerity measures probably in the next 6 months. And the reason they won't is because they're already going through a bad economic scenario. There's riots in the streets, there's burning going on. There's I'm forgetting my percentages, but some 22% unemployment. In the youth, there's 45% unemployment, rioting, theft going on. So there's a lot of crazy things going on. There are a lot of people who are unemployed there already. People are losing their jobs. There's no new creation of wealth. Their banks are almost bankrupt, right? When banks start becoming bankrupt, the companies can't get financing. Besides that, the counterparty bank, wherever in Germany or Italy or US or Australia, they don't trust your local banks. As a result of which, you can't do enough trade. You can't raise a letter of credit. So my point is, it's one thing to say that, yeah, we'll follow through with the austerity measures, but in reality, can you do it? I mean, there's only so much you can do until people start going really crazy. So unfortunately, that's the way I see this. But that being said, will I base my trade based on that? Not really, because that's just a prediction. What I said earlier, the markets can be a lot crazier then you can remain solvent, right? So you cannot just base your trade based on those kind of predictions. Over the long term, sure, that's what it looks like. Over the long term, I feel the stock market should crash. That's what I feel. And that's because of the sovereign debt crisis. I just think that between Greece not being able to meet its commitment, they've got the bailout. They'll get the 14.5 billion by March 20th. That's what it sounds like. There's Portugal in the line. There's Ireland in the line. There's Italy. Now again, Italy has started doing quite good, quite frankly, because of when I say quite good, I mean their bond issues, the 10-year bond issues that were at around 7%, 7.1% a few months back, have gone down to 5.4%, which is again not as good as Germany's 2% or so, but still decent enough, right? So they're out of the red zone, as they would call it. Not completely in the green, but out of the red zone. But could things still go wrong? Well, depends. And if they do go wrong, I think the funds with EFSF, ECB, and IMF, they're not enough. Now, China, once in a while, keeps coming back and suggesting that, it's in their interest. It's in their interest to save Europe, right? Because it's one of their biggest export markets. And not just that, if Europe goes down, if EU goes down, the world trade, the world is so much interconnected that it will have a direct impact on China and Japan and everybody else. So it's really in everybody's interest not to let things go bad. So we'll see how this all plays out. But the point here is, as a forex trader, you really need to be very good with chart reading. That's your number one. That's like your number one basics. If you don't know chart reading, just ignore what I said, all this about Greece and fundamental crap. You'll be wasting your time. Your step one is to be good chart reader. Okay, multiple time frame analysis. What does a monthly chart mean to you? When you come down from monthly to weekly to daily to hourly, you need to understand. You should be able to look at a monthly chart, guys. You should be able to look at a monthly chart. The last, let's say, the 1/3 of the chart to the right, and be able to accurately predict what a weekly chart should look like. You should be able to pick up the last 2 or 3 candles in a monthly chart almost, whether it's a red or, and this is, you should be able to see the monthly chart, guys, as an example, right? If you want to become good chart readers, multiple time frame analysis, you should be able to see the last 2 or 3, 4 candles in a monthly chart, whether it's red or green or blue, the wick, the upper wick, the lower wick, the body of the candle, and then almost with accuracy predict what a weekly chart would look like within that time frame, just that time frame. Then similarly look at the weekly chart or the monthly chart and then predict what the daily chart would look like. So look at the daily chart and predict what the hourly chart would. I said predict, I mean, just play around. Just look at the chart, think through, and then, in the next 5 minutes, go to your hourly or daily, the lower time frame, and then see if what you predicted or the way you kind of mapped it out in your head, is it the way it is? You should be able to do the same thing with parallel and inverse pairs. Pick up, don't do the US major. Start with an exotic pair or a yen pair. So pick up Euro Pound or pick up Aussie Kiwi or pick up Euro Yen, right? So let's say if you picked up Aussie Kiwi as an example, that's an exotic pair. Look at its, whatever, I don't care, daily chart, weekly chart. Okay? Pick up any one chart. So let's say pick up the daily chart. Look at its daily chart and then focus on the 1/3 or the 50% section to the right, the current time frame. And then try and visualize that if that's what Aussie Kiwi looks like, right, going long or short, along with its retracements in the middle. If map it out, don't immediately go on Aussie US or Kiwi US, but take a piece of paper and almost like use your drawing lines and map it out and say if this Aussie Kiwi is going long, along with retracements, in your opinion, where should the Aussie US and where should the Kiwi US be going along with those lines on the Aussie Kiwi, right? You'll be amazed, and this might sound a little silly to you, but as you keep doing this, it's the same amount of detail what I mentioned earlier, what 4718 did on his plan, because he put all that time and effort. I can assure you, he starts getting it better. He mentioned something about being confident. Of course, you're confident, but what you may not realize is you're learning a lot. It's the amount of time you spend yourself on the chart. You start getting better at this. Okay, and especially if you're new or a beginner, you have to do that. So do multiple time frame exercise on your own, and do parallel inverse analysis on your own. Now, at times it's difficult for me to gauge at what level people are in the class, and again, I realize that when I get once in a while an email from someone, or I'm talking to a friend of mine, let's say. I was talking to a friend of mine yesterday, as an example, and he started Forex, whatnot, and he was asking me what to go about it. And he was asking me some questions, such basic questions that I was surprised, and I was like, oh my God, I mean, if you don't know this, you have no clue what I'm talking about. And I don't mean to demean anybody here, but the point I'm trying to make is, it would help us to understand at what level you are, what kind of guidance you need. So let me kind of pause here and ask a quick question. Stuff I mentioned in the last, let's say, 10, 15 minutes. Does this help you? Or am I going too basics? Is this too basic for you? Is this the right level of education for you? Because I need to know that, because then we can do more of this stuff versus the other stuff. We can mix it up a little bit more. But the stuff that I just discussed in the last 15, 20 minutes, then feel free to say, no, I won't get offended. Trust me, I won't. I just need to know. Okay, guys, I'm done. Thanks a lot. We'll see you next week. And 4718, thanks once again for the wonderful plan. And I hope you continue submitting.